All right, and moving on, stocks and oil set a positive tone at the start of December, while gold, dollar and crypto were on the back foot. Despite an identical monetary boost, stocks pulled ahead of Bitcoin and gold. Still, bets of a Federal Reserve rate cut limited the losses in those assets. Well, the first week of December saw oil pull ahead of other assets. Benchmark Brent crude rose to a two-week high on Friday, ending the week with a gain of 2.5%. Geopolitical uncertainty on limited supplies from Russia and Venezuela drove crude bets last week. The expected Fed rate cut in the coming week pushed the dollar lower and treasuries to mark their worst week since June. Despite easing bets, gold ended the week with a loss. Bitcoin extended its losses, with analysts doubling down on crypto winter bets. Still, investors broadly stayed away from making big bets ahead of the Fed's outlook for 2026. The market moves largely reflect subdued sentiment extending from November for most major assets. Now, with major assets covered, let's shift focus to the Asia-Pacific stock markets. Regional stocks crept higher after a wild ride in November. Chinese, Japanese and Aussie stocks showed modest gains through the week, while Indian stocks hit record highs. They ended the week nearly flat on worries over record weakest rupee. Indian markets have been shored up by domestic investors, even as foreign outflows have weighed heavily on the currency. In the coming week, domestic stocks are likely to trade in the green after the Reserve Bank of India eased again last week. However, the risk to the rupee's path is likely to be more to the downside. Now, in the Americas, Wall Street stocks gained but stopped short of closing records on Friday. The S&P 500 is within a whisker of its October all-time high. The tech-heavy Nasdaq recouped some of its November losses to close nearly 1% higher. However, the positive move did not spill over to other parts of America. Canadian stocks closed a touch lower last week. Brazilian stocks took a hit, down over 1%. After former President Jair Bolsonaro backed one of his sons as the candidate for president in the next October's election, Brazilian markets took a nosedive. Brazilian stocks had their worst day since 2021 and the currency fell roughly 2.5% on Friday. Looking across the Atlantic, most European markets ended the week in the green. The French index was the only exception, closing the week with a 0.2% loss. Europe saw most major sectors making gains, with Ukraine peace talks taking the center stage. The gains, though, were limited by the European Union's efforts to use frozen Russian assets to give Ukraine loans. However, that plan has already been thwarted previously. On the currency front, the euro rose to a 7-week high against the dollar, while the US currency had stabilized somewhat in the second half of 2025. The greenback continues to weaken. Having looked at the market moves, let's now turn to the overall economic outlook. In Asia, India continues to be the best performing major economy in the world. The latest data underscores the country's solid growth. On Friday, the Reserve Bank of India upgraded its GDP forecast for the current fiscal year to 7.3% from 6.8% previously. Bets are for others to upgrade India's growth outlook as well. However, forecasts continue to be sour for the rest of the Asian economies. The uncertainties from US President Trump's trade policies is weighing in on the region's growth outlook. In addition, China continues to battle a property recession and a deep deflation from weak demand. In the Americas, the expected Fed rate cut is driven by slowing growth predictions. A dated reading of consumer spending in September showed Americans were already struggling financially before the government shutdown hit. Spending cuts indicate that the primary driver of US economic growth is slowing. Despite a lack of data due to the government shutdown, private sector numbers point to increased layoffs and a sharply slowing economic activity. The Fed is expected to soothe some nerves, but elevated inflation is likely to have a say in 2026. Big Wall Street banks are warning that stagflation risks are on the rise. Trump's trade rhetoric extended to other economies in the region, with the outlook clouded for Canada and Brazil. Now, in Europe, the standard norm across the region is a muted economic environment and falling wage growth. Inflation seemed to have picked up as well. Industrial production across European countries shows symptoms of slowing in October following a robust summer. That suggests manufacturing contribution to GDP growth will be relatively moderate at year-end. For now, though, a slight uptick in Eurozone inflation makes the European Central Bank's decision quite easy. Bets are for no change in rates this month.